You probably think the stock market is the whole game, the entire game. Kate, except that's just the surface, the easy to see, well marketed part. True wealth isn't forged there. That's where you buy the finished product, long after the real gains. The truly massive gains, the explosive growth, insiders have already locked that down. That's private equity, the actual power play. We're about to expose how it works. We're going to dismantle this entire idea piece by piece. First, let's unpack what everyone thinks they know. When I say the stock market, you probably picture the entire financial world. What? All of it squeezed onto one screen. Green candles, red candles, lines constantly fluctuating. You see the charts, the green and red flashing on your screen. News headlines scream at you about earnings reports, about who's up and who's down. That visual is real. But here's the kicker. It's a massive oversimplification. The stock market isn't about buying entire companies. It's about trading tiny, fractional ownership pieces. Understand this. That's the critical difference. Most of us aren't buying control. What we're actually buying is exposure, a mere sliver of a company's future earnings. The market prices it. But make no mistake, you're not running the show. You're not directly touching the company itself. This is why the market you see, that's just the surface. The real beast underneath it all, it's a pure liquidity engine. Its entire design is to make buying and selling those pieces incredibly easy and shockingly fast. Think about it. Your investment's value is priced by the market, completely separate from the company itself. This is precisely why the stock market you see, it's just the visible layer, the absolute tip of a much, much bigger iceberg. At its core, the stock market is a massive liquidity machine. It's a system designed to let ownership stakes be bought and sold instantly in massive volume and with virtually zero friction. You click a button, your trade executes, and the price updates in real time. Instantly, that instant action makes public markets feel like the only market that matters. It's the one you can watch happening live. But here's the brutal truth. Most of your stock trades do not actually change the company you're investing in. When you buy 10 shares of Apple today, guess what? Apple doesn't get a penny of your money. They certainly don't hire new engineers just because you bought a few shares. Don't kid yourself. A company like Apple isn't breaking ground on a new factory just because its stock price ticked up 2%. Here's what most people miss. When you buy shares, your money doesn't actually go to Apple. It goes straight to another investor! That stock market you're constantly refreshing, it's not about fundamentals. It's a playground of sentiment and pure speculation. Seems too simple? Consider this reality. That stock price flashing on your screen? That's not the company's true value. No, it's a projection. It's what investors hope the company will be worth in the future, discounted back to today's price. And that's precisely why public markets are obsessed with price, because price, for them, is the primary product being traded. Strip away all the noise, and the public stock market sells one core service, price discovery. Here's the truth. It's a constant global bidding system that effectively never stops. And here's the kicker. Despite companies being publicly traded, the average retail shareholder has virtually no real power or influence. Millions of investors might own a piece of a company. But here's the truth. Nobody's truly in control. Oh, sure, shareholders get their votes in. And yes, the boards of directors exist. But the reality is this. Most shareholders are completely passive. They're just along for the ride. They own a piece, but they're absolutely not driving the company. And that right there, that explains exactly why the stock market acts the way it does. It's hypersensitive, practically jumping at every single headline. It gets emotional, swinging wildly based on little more than narratives and fleeting trends. And that, right there, is precisely what creates all the chaos you see. It's millions of investors constantly shifting their beliefs, causing prices to swing erratically. The truth is, what you're actually watching on the market isn't real business happening at all. Picture this, millions of different opinions, all clashing. The stock market. It's the financial system plastered across every screen you see. Why? Because those numbers flash on every single screen, everywhere. It's constantly screaming signals minute by minute, demanding your attention. But here's the brutal truth. Visibility doesn't equal real power, because the real power moves, the ones where entire companies are bought out. Their whole future is decided. Those deals are happening on your trading app. And that's why the stock market, the one you think you know, is just the surface. It's the noisy, fast-paced public arena where shares are tossed back and forth endlessly. But the truly massive, game-changing financial shifts, those happen underneath. The market you see, that's just the surface. There's a hidden layer, a whole world they'll never show you on cable news. Think public markets, stocks, tickers, prices flashing for everyone to see, everything out in the open. But underneath that, That's private equity. Whole companies bought and sold in the shadows. No prices flashing on your screen. Here's where it all shifts. Public markets mean you're betting purely on price changes. Private equity? It's about outright ownership, ironclad control, and making the big decisions. A completely different beast. Let me be absolutely clear. Private equity isn't just some fancy stock. It's not even in the same league. Go! This is a game of massive capital. Firms raise billions, snatch up companies, rebuild them, then flip them for enormous profits. Forget mere control. This is about wielding actual undisputed power. Understand this. Private equity isn't some fancy stock you trade on an app. It's a system. One where specialist firms gather truly colossal amounts of capital. Then they deploy that capital. They buy entire businesses quietly off the public market. Next, they restructure them, often ruthlessly. Then they flip them for an absolutely staggering profit. Forget the millions of small-time traders clicking buy and sell orders. This system, it runs on a tiny number of absolutely massive players. We're talking pension funds, sovereign wealth, massive insurance companies. Hey, if you're enjoying this, show some love by liking and subscribing. Let's keep going. Think university endowments and the world's ultra-wealthy families. And the whole thing? It's structured like a cold, ruthlessly efficient machine. Private equity is a financial force. But do you actually know how it works? Let's break down the truth behind the headlines. First up, a private equity firm builds a fund. Picture it like a giant money pot. These are the general partners, or GPs. These are the ones calling the shots, picking the deals, the master strategists, no question. But that pot doesn't fill itself. They raise cash from investors, and these are your limited partners, the LPs. Who exactly are these LPs? We're talking the pension funds for your teachers and firefighters. And we're talking sovereign wealth funds, whole countries parking their oil money. Insurance giants, university endowments like Harvard, even wealthy family offices. These are colossal sums of money. But here's the critical part. These LPs commit their capital for the long haul. Forget short-term gains. This is a commitment of 7 to 10 years minimum. Often it stretches even further. Private equity. It stays private for a reason. It's not just another stock you can buy and sell. No, you can't just sell your position tomorrow. Once you're in, you're locked in for the long haul. Period. The moment they get your money, these firms go on the offensive. They start snatching up entire companies. Here's the brutal truth that truly sets private equity apart from buying shares. They don't buy a piece of the pie. These guys buy the whole damn bakery. This means they can fire the CEO, completely change the prices, sell off entire departments, buy out rivals, slash costs, refinance company debt, or even better for them, force out massive cash payouts. And this is precisely why private equity returns play by entirely different rules than public stocks. They pull the company from the spotlight and drag it into their own private operating room. They don't just buy a business, they storm in and gut it, overhauling operations, ruthlessly streamlining, and cutting the fat. Why? Because their entire strategy hinges on one brutal truth, flipping it for a massive profit. So how do these exits actually happen? They typically unfold in 3 distinct ways. First up, they offload the entire operation to another corporation, a strategic buyer looking to expand their empire. Number 6. Second, they just flip it to another private equity firm. Talk about the ultimate game of hot potato. And third, they take it public, launching an initial public offering, an IPO, and finally unleashing it onto the public stock market. On the surface, all you see is a ticker symbol fluctuating on a screen. Great! But beneath that symbol flicker, the actual transaction was a labyrinth of complexity, played out behind tightly closed doors. Investment firms swooped in, bought the whole company, systematically transformed it, and then cashed out, selling it off to the public for a massive return. And before we dig into the brutal truth of how this actually works, the mechanics they really don't want you to see. Ever wonder where your money vanishes every month? 1 minute it's in your account, the next it's gone. Poof! Like a magic trick. You know you should save, everyone tells you to, but when the bills stack up higher than your hopes, saving feels like a cruel joke. Here's the truth. Think saving is impossible? You try, but emergencies always derail you. That's not bad luck. That's a broken system, and it's time to fix it. Stuck in the earn and spend treadmill, always chasing the next paycheck, only to watch it vanish? That's not just frustrating, it's financially crippling. You crave financial security. You want to stop compromising your future. But what if the advice you've been given is actually holding you back? Get the small talk. It's time we face some uncomfortable truths. Stop trying to figure it out alone. The answers you need are with those who've already done what you're trying to achieve. And it's more than just advice. You could forge powerful alliances. Find the partner who will push you past your limits. Success isn't built in isolation. Your real power comes from a strong network you might need to hunt for. It's rarely waiting on your doorstep. Forget the theory. Forget the fluff. It's time for the brutal facts. It's time for the brutal facts. Pulling back the curtain. It's time to expose how the hidden world of private markets actually works. Tired of the chatter? Good. Because we're about to unlock where the real money is actually made. I'm talking about the private markets, the ones 99% of people never even get to see. Here's where the real mechanics of private equity investments actually kick in. You've probably grasped the concept of private equity, but now we're peeling back the curtain on its deepest secrets, and that's because private markets operate by completely different rules than your typical stock exchange. Consider the public stock market, the arena everyone does see. There, people are trading, actual shares of companies. Relentless buying, constant selling, with prices reacting to every single rumor and expectation. The real game of building wealth, it looks nothing like the typical stock market. In the public stock market, the one everyone talks about, you're trading tiny pieces of companies. You buy shares, you sell shares, and prices swing wildly based on expectations, fear, hype, and the crowd's latest mood swings. It's all about the vibes. It's a market built purely on perception. But in private equity, you're not trading opinions. You're trading control. When private equity buys a company, they aren't just picking up a few shares. They buy the entire company, or at least enough to call all the shots, to make every single decision. Here's the critical difference. A public investor can hold shares for a decade and still have zero real influence. A private equity owner, they can replace the CEO by next Tuesday. Your workday feels like a never-ending battle against the clock, right? A mountain of tasks you just can't seem to conquer? We all try to do too much. We aim for super productivity, but it just leads to burnout. Sound familiar? The problem isn't just the workload. It is that you are probably making it harder on yourself than it needs to be. If you are constantly drowning in tasks, missing deadlines, and feeling like you are always playing catch-up, this is for you. We are going to rewire your approach to daily tasks. This isn't about working harder. It is about working smarter, with precision. Imagine having a clear plan for your day, knowing exactly what to do and when to do it. No more guessing, no more chaos. That feeling of consistent accomplishment, it is within reach. You just need the right system. The biggest enemy of productivity? Distraction. It is everywhere, constantly pulling you away from what truly matters. First, you need to understand what needs to be done. A simple, brutal list of priorities. No fluff, just facts. Then, ruthlessly prioritize. What is critical? What can wait? What can you eliminate? This step is non-negotiable. Next, tackle one task at a time. Shut out the noise, block out distractions, give that one thing your absolute undivided attention. Use time blocking. Dedicate specific blocks of time to specific tasks. When that timer goes off, you move on. The goal is momentum. Keep the ball rolling. Every completed task builds confidence, fueling the next. And yes, take breaks, but make them intentional. Step away, reset, then jump back in with renewed focus. At the end of the day, review your progress. What worked? What didn't? This feedback loop is how you get better. This is not about magic. It is about discipline, about consciously choosing to control your time and attention. Consistency is king. Apply these principles every single day, even when you don't feel like it, especially then. The result? Less stress, more completed tasks, and a sense of control you probably haven't felt in a long time. Stop feeling overwhelmed. Start taking command. Your productive future starts now. No more excuses. That apartment you just put a down payment on, you only truly own about $20,000 of it. But as you chip away at that mortgage, say it's down to 30 grand, suddenly you own 70,000. Same apartment, same walls, same location. The only real difference is how much belongs to the bank and how much is truly yours. That exact principle, that's precisely how private equity makes serious money. Let's revisit that coffee shop business we discussed. Year one, the business is valued at $1 million, but it's carrying $700,000 in debt. Your real equity? Just $300,000. Equity, by definition, is simply the value of an asset minus what you still owe on it. Fast forward a bit. That business starts making serious money and aggressively pays down its debt. 5 years later, the business is still worth that same $1 million. It didn't even have to grow. The key was simply staying stable and profitable. Cut your debt to $400K and your equity instantly jumps to $600K. That's real growth. That business didn't need to double sales. They just aggressively redirected cash flow straight into debt reduction. The takeaway is simple. Less debt doesn't just reduce a liability, it supercharges your equity. Carry, and that's your first major letter. But it's certainly not the only one. When a smart investor, like a private equity firm, acquires a company, they execute two critical maneuvers simultaneously. First, they completely overhaul the business operations. And second, they ruthlessly optimize its financial structure. Why? Because a better run business isn't just more efficient, it's fundamentally stronger at its core. Before anything else, sharp investors dissect the granular details of how a company operates day to day. Where is your money actually going? Do you even know? What recurring payments are just dead weight, adding zero value to your life? What investments or habits are actively draining your progress year after year? Or worse, are you drastically underselling your time or your unique skills? Is your personal budget a bloated mess of subscriptions and items you never actually use? Never fee. It's time to consolidate your financial positions to build yourself a bulletproof foundation. Why? Because every single move we make has one brutal, undeniable goal: to dramatically increase your consistent, predictable cash flow. Because stable cash flow isn't just money, it's your financial fuel. It's what crushes debt, builds real wealth, and truly secures your future. And those returns, they don't just happen. They're amplified, maximized through a smart financial structure. There's a hidden game at play. The financial wizardry happening entirely behind the scenes. The pros don't just glance at a business. They demand, what's the optimal financial blueprint for this company? Translated, that simply means exactly how much debt should a company carry. But it's not just any debt. What kind specifically? What interest rate can they actually secure? And what's the repayment timeline? These big investment firms, they're relentlessly reshaping a company's entire debt structure, slash those interest rates, and cash flow skyrockets. Lengthen the loan's repayment period, and you drastically cut risk. The payoff? A more stable business always secures better borrowing terms. That's leverage. Want to know how some investors rake in absolute fortunes? They don't just use one trick, they deploy multiple forces all at the same time. First, they slash debt. That immediately skyrockets the company's true value. Then, they ruthlessly streamline operations. Cash doesn't just flow, it floods in faster. They optimize financing, then flip the entire enterprise for a staggering payout. And here's the kicker, that last step, that's the only one that truly matters. You just built a gold mine, so why on earth would you ever sell it? Makes zero sense, right? The answer is brutally simple. For most people, holding onto a company is all about owning that asset. But for private equity, selling it isn't an option. It's the entire strategy. It's the end game. They're not in the business of long-term ownership. Their game is pure transaction. It's deal-making, full stop. Forget forever. Whether it's a big investment or a career leap, every power move has a window, typically 5 to 10 years. The return, the profit, let's be honest, that's the only reason you're in this game. That's the payout. So, just buying a stock or simply landing a new job, that's not the play. That's not enough. You acquire it, you improve it, and then you strategically dump it for maximum profit. That's the blueprint for real wealth. Imagine you've grown an asset, wrapped a huge project, and cashed out. What do the numbers look like? Sell for $1 million, clear $400K in debt, and you're sitting on a clean 600 grand. That's your net gain. In one move, you just doubled your initial investment. We're talking 300K turned into 600K. That's the smart money play. This isn't luck. This is the blueprint, the actual strategy that builds serious, undeniable wealth. Because what you see as success out there on the market, in public, that's not the beginning. That's the finished product. It's the polished, final version. After the heavy lifting, the gut-wrenching improvements, and the strategic positioning, you see a company hit the market and think it's ready. But long before that, it's bought, torn apart, rebuilt, and strategically prepped for one brutal goal: profit. You're fixated on the surface, the ticker, the chart. You think that's the game. But the actual transformation, what makes a company a real investment, happens where you can't see it. The real investment value. The actual turning point for a company, it's never what you see on the surface. If you're not digging deeper, you're missing the entire story. That's the insight for this deep dive. Now make it count. I'll see you next time. That's the cold, hard truth. Enough with the excuses. Now go execute. Back with more unfiltered insights. Until then, stay sharp.